Let's jump right in. Today, we're launching a full-blown investigation into what looks like a massive structural breakout happening right now in the Indian pharmaceutical sector. We're opening up our evidence dossier on AKUMS Drugs and Pharmaceuticals. Now, we aren't just looking at random stock movements here. No, we're dissecting the actual anatomy of a major financial turnaround, a totally commanding market moat, and a huge influx of institutional capital. So, let's unpack this data. To build this explainer, we really needed to cut through all the usual market noise, so we brought in Google Gemini to act as our personal AI assistant. Modern investors use AI like Gemini to rapidly process dense financial reports and parse massive data sets, and well, it did exactly that for us. It really helped us isolate the core structural truths of the market hidden in all this complex equity research. And honestly, what we uncovered about AKUMS is absolutely fascinating. Here's the roadmap for our investigation today. Section 1 is all about the ghostwriter of Indian pharma. Then Section 2 looks at a massive financial turnaround. Section 3, we're following the big money. Section 4 covers the red flags you need to watch out for. And finally, Section 5 gives you the final investment verdict. We are going to systematically cover the fundamentals, the technical footprints, the risks, and those bottom-line targets. All right, Section 1, the ghostwriter of Indian pharma, establishing the moat. Let's look at their core business model. As the largest domestic contract development and manufacturing organization, or CDMO. Okay, let's dive into this. 11 to 12%. Now, to put that into perspective, this isn't some profit margin. This number represents AKUMS' sheer undeniable dominance in the market. They actually manufacture roughly 11 to 12% of all domestic pharmaceutical consumption volume in India. Think about that for a second. When an entire nation consumes medicine, this one single company is quietly manufacturing more than 1/10 of it. That's just wild. So how exactly are they pulling this off? Well, AKUMS isn't just your average pill maker. They are basically the highly regulated ghostwriters for massive pharma brands. We're talking giants like Cipla, Abbott, Sun Pharma, and Mankind. Now, you might be wondering, why is this such a deep moat? Well, in the CDMO space, switching costs are incredibly high because of rigid tech transfers. When you add in their 1,000+ new drug approvals and over 1,000 domestic regulatory safety approvals from the FSSI, you start to see this massive lead time advantage. It's a barrier to entry that smaller boutique players just literally cannot overcome. Moving right along to Section 2, a massive financial turnaround, specifically looking at the FY26 inflection. Let's pivot to the financials to see exactly why institutional money is quietly pouring into this mid-cap stock post-IPO. The top-line revenue growth here is crystal clear. Consolidated revenue pushed from 4,118 crore rupees in FY25 right up to 4,359 crore in FY26. But you know what's equally important? The debt narrative. Following their IPO, AKUMS deployed that fresh cash to completely wipe out their high-cost term debt. Operating with zero high-cost debt means they now have net cash surpluses to really fuel their global expansion. And this brilliantly illustrates the dramatic operational turnaround. For years, you see, their trade generic segment was a real drag on operations. It actually posted a 28 crore loss back in FY25. But look at that massive shift in Q4 of FY26, a positive 1.4 crore profit. That legacy drag has finally been resolved. This structural inflection point turned their operating profits positive, and it sparked a massive 135% year-over-year spike in their adjusted profit after tax. So every new rupee they make in their core business, it now flows straight down to the bottom line. Now for Section 3, following the big money, technicals, and footprints. Let's shift our focus from the balance sheet over to the stock chart to see if the technicals actually confirm this fundamental turnaround. If we look at the chronological sequence, the stock's technicals are forming a textbook cup and handle configuration. For months, it was trading in this tight accumulation base, basically a horizontal boundary between 410 and 550 rupees. Then, boom, a structural golden crossover hit where the short-term 20-day moving average cleanly crossed over the 50 and 100-day lines. But the real catalyst, that was a clear breakout past the 570 resistance level, backed by a massive daily volume of over 8.3 lakh shares. Let me be clear, this isn't just some transient retail speculation. This heavy volume proves serious institutional accumulation is happening. When you break down the institutional pie, the shareholding footprint shows a massive vote of confidence from the inside. The promoters hold a rock-solid, locked-in stake of 75.26%. And get this, they have absolutely zero shares pledged. Domestic institutional investors are also backing them robustly, with a 14% hold. But what's really intriguing here is that foreign institutional investors hold just a tiny 1.38% sliver. For a fundamentally sound, debt-free market leader, that foreign capital footprint is remarkably low, and what that means is there is a massive runway for a re-rating as global money inevitably discovers and targets this breakout. But keeping our impartial detective hats on, we need to rigorously examine the threats. Section 4, Red Flags to Watch, the bear case. What could derail this breakout? Every investigation needs a bear case, right? So first up, their active pharmaceutical ingredients, or API segment, is currently an operational drag. They posted a 12-core loss in Q4, largely due to severe structural pricing headwinds coming out of China. A renewed global price war there could definitely offset some of their domestic gains. Second, even though they have over 1,500 clients, there's high concentration. Their top 10 external buyers contribute a massive chunk of the revenue. And finally, their big, high-margin export plans, well, they rely entirely on passing incredibly stringent regulatory audits from the US FDA, UK MHRA, and the EU. Any surprise import alerts from them would act as a massive roadblock to their plans.
All right, let's bring this explainer to its climax. Section 5, the final investment verdict, targets and strategy. Let's look at the consensus estimates drawn right from our source dossier.
So, there's a really deep margin of safety currently sitting in the market. Right now, AKUMS is trading at a trailing PE multiple of around 32 to 33 times. But when you look at pure-play domestic CDMOs or specialized high-growth peers, they regularly command PE multiples of 40 to 50 times. Just look at that gap. It visually demonstrates an asymmetrical opportunity at these current trading levels, especially considering AKUMS is projecting 15 to 20% profit growth over the next few years. The consensus view across the major institutional brokerages is pretty clear. It's a strong buy. The base case target sits at 690 rupees, but that relies heavily on them maintaining steady 12 to 13% margins and smoothly executing their new international contracts. A great example of that is the highly anticipated $25 million joint venture in Zambia. Now, the bull case pushes that target up to 775 rupees, which would be triggered if they aggressively deploy cash into rapid generic monetization and M&A, but you always have to respect the bear case, sitting at 520 rupees. If those API losses persist or export volumes face regulatory delays, that 520 mark is your downside floor. And that brings us to our final provocative thought. AKUMS has successfully navigated its IPO, wiped the slate clean of high-cost debt, and is generating a massive, growing cash surplus now that its generics division is profitable. They are literally sitting on a war chest. The true catalyst for that 775 rupee bull case isn't just organic growth. It's about what they do next. So, with zero debt and all that cash, what specialized high-margin company will AKUMS acquire next to unlock its ultimate value? Keep a very close watch on this space, folks, because the next chapter of this breakout story is really just beginning.